Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Today we're talking about the Nvidia results. They were absolutely ridiculous in terms of the forward guidance. The stock is up 30% today, which makes this 755 billion company with an outrageous PE ratio close to $1 trillion now, one of the largest corporations in the world. Really, a lot of it is coming on the AI boom. We are seeing an inflection point where data centers are changing from being heavily CPU based to being heavily GPU based because of the AI explosion, and Nvidia is going to benefit from that in a big way at the fault of companies like Intel, which are kind of going down the crapper. Nvidia is shooting up. Intel has been down the crapper for quite some time now, but they're going to continue to be in the crapper as data centers transition to that GPU based economy essentially. So what do the earnings look like? And again, this is coming from somebody who owns a lot of Nvidia. Very happy with the stock performance in the last couple of months, really the last year. If you look at the year-to-date returns, even before the 30% bump that's going to come today, it's up over 100%. Absolutely ludicrous. AI, 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 AI. You hear earnings calls everywhere. Everybody's talking about AI. And NVIDIA is the hardware provider that is going to drive that AI revolution. You talk about picks and shovels. When people go out to dig for gold in California, the people who made the most money were the people providing the picks and shovels because not everybody finds gold. This is the case here. Not everybody who is in the AI space is going to do well, but NVIDIA is going to provide the hardware for a lot of these companies and probably going to do pretty well. Now, the question is NVIDIA priced appropriately at this point, despite the AI revolution being probably a pretty big thing? Is it a catchphrase? Is it actually going to be as big as people think it's going to be anytime soon, or is this way out into the future? Who really knows at this point, but NVIDIA is certainly benefiting from this little boom that's happening right now. So if you look out a bit further, this is a 5-year lifespan. NVIDIA isn't a stranger to this type of thing. If you look at Nvidia in 2020, 2021, my initial purchases of the stock were in that $50 to $60 range. My overall cost basis for the stock is $84. So you can kind of see why I'm happy about this stock being $400 right now. Huge returns for me. And this is one that I've already made money on in the past trading. Essentially, what's happened here is you look at this, the cryptocurrency boom came and went. Nvidia was a big beneficiary of that because people were using their GPUs to mine Bitcoin, mine other cryptocurrencies. This stock went up to $330 plus. I was selling this stock in this space, and I'll talk about why I was selling it. It fell after the cryptocurrency boom kind of settled down. I bought some more here, taking up that initial cost basis in the 60s up into the 80s. So I've already made quite a bit of money on this stock, and I'm happy to take those profits when I can because things do get frothy a bit. Whenever you're dealing with a stock that's very momentum driven, that's very driven by a certain theme, prices go up and they can come down pretty quickly. Right now, we're in this cycle where this stock is up, basically 150% after today. It was up that much or even more when cryptocurrency was a thing. And cryptocurrency was a theme that was dominating the news cycle for quite some time, and it is no longer doing that. Now AI is dominating the news cycle, and NVIDIA happens to benefit from both of those stories. But is this a story that is going to fizzle out, or is this actually something that is going to change the way their business model operates and make them valued appropriately based on future revenues? So let us take a look at those earnings. So quarterly revenue here is 7.19 billion, up 19% from the previous quarter. Now, the one thing they don't mention is actually down 13%, and they mentioned it here, down 13% from a year ago. And that is because the cryptocurrency boom has died down. The video gaming stay-at-home boom has gone down. And again, they are selling graphics cards for the most part, and those are very useful in video game processing, in data centers, which are benefiting right now, but also cryptocurrency mining, which is kind of dying down. So that's why they're down 13% from a year ago. So you ask yourself, well, if it's down 13% from a year ago, why the hell are we up 30%? Why the hell are we up 150%? from that past year, essentially? Well, it's essentially this second quarter fiscal 24 revenue outlook, which is the one coming up, which was probably expected to be in that 7 to 8 billion range by most analysts, is now 11 billion. And that's because people are buying the hell out of their GPUs to fuel that AI, accelerated computing, generative AI boom that is happening right now. So you're going through different transitions, and both of those are benefiting Nvidia in a big way. So when you have a stock that has a future outlook that is expected to be 7 to 8 billion and it ends up being 11 billion, that is a huge difference. That is going to drive your price up quite a bit. And that is what's happening here right now. Remember, stocks are not priced based on historical earnings. People will look at the stock, and this is even before today's bump up, and they'll say, well, this stock is priced at 175x. That is ridiculous. And that's kind of true, you know, but what happened in the past doesn't really matter, and this shows exactly that. What happened in the past was 7 to 8 billion in revenue. What is going to happen in the future is 11 billion in revenue. That is a huge change. That is showing that this business is priced based on their future projections, not based on the past, as they should be, right? Businesses are always going to be priced on future projections, not what has happened in the past. And if you look at the past, you are just looking at something that might not repeat, right? So you have to look into the future and kind of try to predict where the stock is heading in order to be a successful investor. And that's sometimes tough to do. You know, when you look at the historical price point of this stock, could anybody predict the cryptocurrency boom? Not really. You know, I benefited from that. I didn't necessarily think this stock was going to go up from $60 to $320 in basically a year and a half, but it did. And when it did, I was like, well, maybe I should trim my position a little bit because this is crazy. Ridiculous. Can't believe this is going to be sustainable. So I got out a little bit. I basically sold half my position, made 4x my money. So if I had invested $10,000, you know, I could probably sell half my position and still have $20,000 left over after making $20,000 in profit or something like that. Whatever the dollar amounts were, I don't remember exactly what it was. But after I sold, I was lucky enough to sell somewhere near the top. You know, I didn't necessarily sell at 330. Sometimes you'll sell a stock and it'll keep going up and it'll keep going up, and you'll say, "Oh, I've made a terrible mistake." But you know, eventually things do tend to revert to the mean if the company's earnings do slow, which in this case they did because the cryptocurrency boom faded out. The stock fell, you know, 50+%. So if you're an investor that was buying the hype, like you could be right now, you're buying something at the peak of the hype cycle potentially, you were burned really badly in the short term because the stock went from 329 down to 108 is the 58-week low. So once it fell back into that range where I was comfortable buying it into the 100s, I basically doubled my position, got back to where I was before, and the hype cycle began again. Again, I didn't expect it to. I was like, I like this company for the long term. I'm a guy who plays a lot of video games. I think the data center business is solid. Is it as solid as the results seem to indicate in the future? I didn't think so at the time, but who knows what's coming? At the end of the day, some of these tech companies benefit from cycles, news cycles, hype cycles, and Nvidia is certainly one of those. And I have been a huge beneficiary of that. So I'm happy to own this company. The problem is the pricing reasonable again? You know, is the pricing reasonable at this point rather? I think it was reasonable again in the 100s, in the 120s, 130s, 140s. And I didn't think it was all that reasonable going into the earnings yesterday, but I was pretty wrong, which is why I'm glad I didn't sell my shares. But now that it's up another 30%, I'm thinking this is another time in this cycle where I want to cash in my chips and take a little bit off the table. With these stocks that are very much momentum driven, I like to do that from time to time. You basically say, well, I've already made 4 to 5x my money. What is the upside from here? Now, Nvidia is a $1 trillion company. It's in rarefied air, or it's close to a $1 trillion company. It is one of the 5 to 10 biggest companies in the world. And what does that mean from a valuation perspective? So you are looking at something that even before today's bump, already had a 1.7% free cash flow yield. When you look at the dynamics of the stock market and the bond market today, you can basically get 5% yield on cash today. Now you put your money in a bank account, you can get a 5% yield. You can get 5% yield on, short to midterm bonds, anywhere from 1 month to 1 year, you can get 5% yield. So when I look at stocks that are yielding a third of that, I get a bit worried. And that is certainly the case here, right? This is a 1.7% yield when the stock was $750 billion. And now it's up 30% from there. Now, the good thing about that is that it's up 30% because forward estimates, and those are already reflected here in ticker, are up quite a bit, right? This was basically a stock that was expected to grow at a much smaller clip on a go-forward basis, but the AI boom is certainly changing that. Now the expectations are they are going to grow about 50% in the next quarter, and the expectations from estimates here are that it's going to continue in your 2024 fiscal year. So you're going from 27 billion in revenue to a free cash flow of 15 billion or something like that based on these estimates. Free cash flow margins are kind of in that 36% range. Is that optimistic? Is that not optimistic? It's hard to tell. They were certainly lower in the past year, but they are reverting back to more of the mean. Historically, they probably spent a bit more money this year kind of getting up and running on some of the infrastructure that is needed to fund this generative AI boom. But again, if you're talking about a free cash flow of $15 billion versus a $1 trillion market cap on a forward basis, and that's what the valuation in the back end was showing, you're still sitting on a 1.5% cash flow yield, future cash flow yield, essentially. So that's a bit tough from a pricing perspective. You have to look at it, well, I can probably get stocks on the market today, and then let's look at something like Google, for example, which is a company that might also benefit from the AI boom on a different end of the AI boom, not the hardware scale, but the other scale. Google is generating, for you as an investor, about 4.6% future free cash flow yield in the next 12 months. So you're looking at something that is more in line with the cash yields, with the bond yields, but you probably are more likely to choose something that is closer to the cash flow yields on a stock basis, because that stock is going to grow that yield for you in the future, whereas cash and bonds are just static, 5%, and not guaranteed for the long term, right? If you're putting money into a bank account today, you are putting it in for the short term, because those cash yields may go down pretty quickly if the Fed starts lowering rates. Same with bonds. You're not getting that 5% cash flow yield on a 30-year bond. You're getting it on a 1-year bond, and they drop lower the longer you go. And even if you are getting it on a 30-year bond, that 5% cash flow yield will never grow. Whereas as a stock owner, if you're buying a 4.6% yield today, or closer to 5% yield today, and you look at the estimates, those cash flows that are 60 billion today, potentially by 2027 are going to be double that. So by 2027, you're yielding 10% cash flow yield based on today's prices if you buy today, and if these earnings emerge as expected. Now, there could certainly be a recession in the near term, which means in the near term, cash flows might drop precipitously even, which may yield lower stock prices. But from a long-term perspective, that's kind of what you're banking on. You're banking on these 5% stock cash flow yields to be more than that in the future, which is why you would buy stocks today against a backdrop of 5% cash yields. So if you look at Nvidia at 1 trillion, the idea should be that, hey, in the future, this is going to grow at a much faster clip than some of these other stocks that are potentially yielding 4 to 5 to 6% today. And that's potentially the case, right? They're obviously growing at 58% today in the next year. That's the assumption, at least. But even after that happens, they're still yielding 1.5% cash flow yields. So that means that in order for me to reach that 10% yield that I might be able to get with Google, they have to grow at a much faster clip. And does that seem to be realistic? These estimates here are kind of showing that, hey, maybe by 2027, we're going to be at 70 billion in revenue, whereas Google is at 70 billion in free cash flow, right? That's the trade-off you have to make as an investor. Well, I'm paying $1 billion for Nvidia, which has maybe in 2027 70 billion in revenue versus paying $1.5 billion in enterprise value for Google, which has $70 billion in cash flow today. So is Nvidia a good value after going up 30%, despite growing as quickly as it's going in the next 12 months? And the answer would be, well, no, if these growth rates are what they're going to be. I think as an investor today in Nvidia, you have to be confident that the 58% growth isn't going to go down to 1% in the following year, isn't only going to be 20% in 26, 27, 28, because you want that $1 trillion investment to generate a lot more free cash flow for you and be a lot more generative in terms of returns on a go-forward basis. Because if this is it, then this isn't all that interesting to me as a future investment. Because even if you get to 80 billion in 2028, fiscal year 2028, and this seems like it's a bit low on the free cash flow margin space, but let's say it's a 25, 30 billion in free cash flow, that's still a future cash flow yield of 2.5 to 3%. Whereas my expectations as an investor might be that in that same time frame, based on today's prices, I'm getting 10% out of Google. So what's a better investment? Now, that doesn't mean the market's going to be rational and think of it that way, but I think of it that way. So when I look at Nvidia today after this 30% bump, and I look at the realistic chances of, let's say, them tripling this forecast, because if I want this to be a comparable investment to Google, I want something like a 7 to 10% yield. And if this is right now at a 2.5% future yield in 2028 fiscal year, I want their revenues to be triple of where they are to reach those triple cash flows that I would need to generate that. And is that realistic? Maybe, because this could be a complete game changer if this AI thing, and if Nvidia is at the forefront of that, maybe they can reach that. And that's kind of what the market is betting on. Now, these booms kind of have a hype and fall cycle, and right now we're certainly in that hype phase. So for me, I'm thinking I want to take a little bit off the table. And I'm in a spot where I've already made a good deal of money on this stock. I've sold some before where I've already made a good deal of money. Now, if I held it until today, I would have made a bit more, but I don't look at it that way. I've put that money into other investments, and I've basically bought back at a much lower price. So selling at the peak isn't always the worst thing. Now, you can certainly look at it that way from another perspective. Like, what if you thought Apple was at its peak? Or what if you thought Amazon was at its peak, 10 years ago before they even became what they are today? Now, that is certainly true. Selling too early is very detrimental to your returns, which is I generally am a very long-term buy and hold investor, and I don't plan to sell all of my Nvidia shares. But when you look at a company like this, that sort of argument has less merit in my mind, because this is already $1 trillion company after today's rise, almost $1 trillion company. So that makes it less likely that you're going to miss out on generational wealth from selling today. Because what's the upside from here? Well, the upside would be that maybe this becomes the largest company in the world. Maybe this eclipses Apple in the future, which means that this would be a $2.6 trillion company. And there are larger companies in the world than Apple, some of the Saudi Arabian oil companies, et cetera. But still, so maybe the upside is that. If you're really optimistic, I guess it could be more than that. But you're talking about 2 to 3x from here, which is very optimistic in my mind. I don't think that's going to happen anytime soon. Maybe in the long term. But the downside is that it essentially does what it just did a year and a half ago or 2 years ago, where the hype is there. The growth is certainly there, because the growth was there during the cryptocurrency boom as well. If you look at their financials, if you go on a estimates page, grew from, this was a $10 billion revenue company in 2020. It was up 50%, 60%. Well, it's up, then it kind of flatlined, and now it's potentially going up 50% again. Is it going to go up another 60% here? Potentially. And that, I think, has to be the assumption if you want this valuation to make sense, that this is going to grow at a faster clip than what these estimates are showing. And maybe these estimates aren't yet adjusted for what the new normal is based on their Q2 growth in 2024. But you have to have that assumption in order to make this valuation make sense. Because if it's not there, then you are in a bit of a pickle. Now, am I going to sell all of my shares? No. I still like the company. I still like it long term. But I think I do want to take some profit off the table, put it aside. There's nothing wrong with having money on the side right now. Like I said, it's yielding 5%, which is pretty good. So potentially I'll be in a position to get some of these shares back at a lower price. But if not, and if this thing keeps going up, if this is a runaway train that can't be stopped, then I'm still going to hold a good portion of these shares because I still have quite a bit of a holding in Nvidia. This has become probably my third largest holding, I want to say, maybe even second based on today's price action. So I don't want to be too heavy into this company that I think is very momentum based, that I think can be very volatile, and not only think, but know can be very volatile based on what happened in the past. So that's my take on the Nvidia earnings. Are they fantastic? Yes. Is Nvidia in a good position going forward? Yes. Like I said, data centers are changing. Right now, data centers are very much CPU focused, or in the past, they have been very much CPU focused to pull a lot of data, with GPUs being there as a side piece of that. That is going to change in the future. CPUs are going to be the side piece, and GPUs, which are computing data on the fly, as AI is used to do a lot of the things that data centers need to do. NVIDIA is going to be a big player of that. And that's why it's priced where it is. But a $1 trillion company that is earning, maybe 40 to 50 billion in revenue in the next 12 months isn't all that exciting from a valuation standpoint. However, that doesn't mean this is a bad investment. I don't think this is a bad investment because if I thought that, I would sell everything. But I do think that NVIDIA is at the forefront of something that could be huge. So I want to be a part of that. But I also want to be realistic in terms of valuation, in terms of where I want my money allocated and where I feel comfortable having my money allocated going into potentially what might be a turbulent time. Is there a recession ahead? If there is, which companies are going to be hurt the most? It might be companies like Nvidia, which are priced to perfection. And it is getting to a point where it's priced to perfection. And anytime a company is priced to perfection, there's two end results. One, they are perfect and the results are fantastic. Or they aren't perfect, the hype dies down, and there's a massive flood of money away from the stock, which allows us to buy it at a much lower price. So don't know what the future is going to hold, but I am hedging my bets that it could be one or the other by selling maybe half my position. So that's where I am today. Fantastic earnings from Nvidia. I think the future is bright for this company. Is it as bright as the market cap seems to indicate? Maybe not, which is why, for me, at least, it makes sense to take some profit off the table. Again, you guys should do what you do with your own money. I am not a financial advisor. Please do not take this as financial advice. I do this all for entertainment purposes only. So keep that in mind. Please talk to a qualified financial advisor before you make any investment decisions. For me, am I buying Nvidia today? No. Am I holding Nvidia today? Yes, but with a caveat that I plan to take some money off the table, probably today, actually. I'll just log on in the morning once the market opens. This is being recorded before the market opens. And we'll see where it goes from there. But I have faith in this company. I think management here is fantastic. I love what they've done. I think they've positioned themselves really well for the future of computing. They are by far the best in the GPU space. AMD is a distant second. Intel isn't even in that space in any big way. I think they've missed the boat, both even on the CPU side, they've done really poorly there. And the GPUs are becoming more and more important as the computing space moves away from being so heavily reliant on CPUs. The data center space moves away from being so heavily reliant on CPUs. So if you want to be in this space, NVIDIA is certainly the play. It's just that the valuation is a bit rich. And as an investor, sometimes you have to take money off the table and deploy it into spots where you think they're going to be more beneficial from a long-term growth perspective. Now, I don't think Nvidia is going to be a poor returner. Even at 1 trillion, it might still do well, but I think there is some potential for downside from here, which would allow for a better entry point. And the upside isn't going to be, 150% in a year like we've seen in the last 12 months. So that's kind of where I am from here, but I would be interested to know where you are. Do you love this company? Do you think it's overpriced? Let me know what you think, and I'll talk to you again soon.